All right. Good evening. All right. Good evening, everybody. Good evening, everybody. All right. Good evening, everybody. If you're in class and you can see my face and hear my voice, I like to just type one in the comment section. All right. Please join the class very fast so that we just go straight to the point. Just go straight to our class. All right. Let me just continue. Okay. If you can see my face and hear my voice, just type one in the comment section. Type one in the comment section if you can see my face and you can hear me. I want to be sure you are hearing my voice. If you can hear my voice, just type one in the comment section. Type one, just type one in the comment section. If you can see my face and you can hear my voice, just type one in the comment section. All right, beautiful, beautiful. So let's continue so that for those who will be watching the video later, you don't have to like stay so long at the beginning of the video so that we can just go straight to the point. First of all, I want to show you the trade that I took around 2:30 p.m. today. I want to show you because that will give you a clue into what we're about to talk about tonight. So let me just show you how that trade look like. Okay, the trade that we took today. Let me share my screen with you. How and what I'm going to share with you today is exactly how we enter that trade and made profit. How we enter that trade and made profit. That will perfectly explain what we want to do today. I don't know if you can see my screen like that. You can see my screen like that now. Beautiful. Beautiful. If you can see my screen like that, you see this is exactly what I want to share with you today. How we entered this trade and made profit. I closed the trade this evening when I was about to go to car wash to wash my car, but it was massive profit. This is good. It was massive profit. So let me let me okay, so now you can see these lines you are seeing on my screen, they are called trend line. You see where I wrote BH, it means buy here, buy here. In other words, I've been all the time that the price is here, I already drawn these trend lines, and I was saying if this trend line get broken to the upside, first of all, this is the first entry. The first entry was here. The first entry was here. The first entry was here. Then I there buy here, buy here. First of all, when this place was forming, it was here. We were supposed to buy that. When this trend line gets broken, we're going to take in a buy. Then it came back. Look at this other trend line that's touched here. So at the close of this candle, we risk buy, and then the price is still buying, is still buying. This is a lot of profits. This is let me see how many pips is this. Up to now, this is 1010 pips. 1010 pips at the moment. 1013 pips at the very moment, and the price is still going. We entered this trade, I think, around 230, and then I think it probably was around somewhere here when I wanted to go and wash my car, when I wanted to go to the car wash, and then I closed that trade, and then okay, maybe I will have still have stayed on it, but it's good, it's great, thank God. We made profit, we closed somewhere around here. So now, how did we enter this kind of trade is what I want to explain tonight. And I was telling you, I've been telling all of you in that class that make sure that all the previous video you watch them, because as it gets deeper, if you don't watch the previous video, it might be becoming difficult for you to understand. And that is why I arrange this syllabus systematically, just to make sure that very strong foundation is laid so that every new class is built on the previous class. Are we together? Are we still together? Okay. Are we still together? All right. So let me now take you to my slide. Let me take you to my slide. So I want to share with you today what I call trend line. Trend line. And just like I've been telling you that there are basically three kinds of market that are tradable. Okay, we have the uptrend market, we have the downtrend market, then we have the ranging market. The uptrend market and the downtrend market, they are all trending market. Whether it's trending up or it's trending down, it's called trending market. Then we have the ranging market. So the strategy I've been sharing with you using this and what I want to share with you today, they are all applicable when the market is trending. When the market is trending, they're very much applicable. Now, trading with trend lines. Trading with trend lines. Trading with trend lines. Now, can you see trading with trend line on your screen? Can you see my screen? Can you see trading with trend line on your screen? And then you should be able to see that. I can see it by my side here. So now, let me go to my slide. Trading with trend lines. Question, what are trend lines? Now, trading with trend line. What are the benefits of trading with trend lines? Number one, trading with trend line is very simple. The simplest way of analyzing the market. Trend line is very simple. It's very simple to trade with trend line. Number two, it provides high probability and high accurate setups. Listen, trend line does not lie. Trend line does not lie. It is price driven only. It is price driven only. You don't need any additional indicator or anything. It's just price driven, purely price market, purely price action. It works on all time frames. Like the one I did today, I think it was on 15 minutes. The trend I was telling you today, it was done on 15 minutes. It was on 15-minute time frame, and then it works on all time frame. It works on all currency pairs and indices. There is no instrument on which you cannot use trend line. Trend line is powerful, and in the next couple of classes, we're going to be going deep and digesting, analyzing the power of trend lines. Trend line can make a multi-millionaire in the financial market. But I know people who don't use any other strategy apart from trend line. And we have two types of trend line. We have the two strategies in trading trend line. We have the trend line bounce and trend line breakout. All of these are going to be well explained to you in the course of this training. Are we still together? And so I said number one is very simple to use. Number two, it has high probability and high accurate setup. Number three, it is price driven only. Number four, it works on all time frame. Number five, it works on all currency pairs. Next slide. Common mistake in drawing trend lines. Drawing trend lines through obstructions. There must not be obstruction between point 1 and point 2. There must not be obstruction between point 1 and point 2. Number two, drawing trend line through candlesticks wicks. Do not draw trend line through the candlestick wicks. All of this will be explained to you, but I need you to get the theory first, then we go to the practical. When you are drawing your trend line, it must not pass through the wick. It must just touch the wick. So do not draw the trend line through the candlestick wick. Then the next point, common mistake. Drawing trend line that do not touch the peaks and the trough. There must be a pinpoint connect of two peaks or troughs. I will explain all of that to you, especially if you are hearing this for the first time. Keeping already breached trend line and not drawing a new one. Like for example, today now, the only reason I go catch that gold, there was a trend line I drew before that one that was breached. So I needed to draw another one, another 230 because there was news. I just wanted to find a place to enter, and then I drew another trend line, and thank God the first one was already breached, and then that one was perfect, was just perfect for me, and then we were able to enter a trade and we made a lot of profit. So keeping already breached trend line is not always the best, and not drawing a new one is not, that may not be a good attitude. See, but there are instances where you have to keep the breached one because it may be, especially when price is not too far away from it, so that because in the near future, price may still respect it. So when a trend line is breached, the price has passed through it, but price is not so too much far away from it, you can still keep it because price may come back later and respect it. Okay. So when a new trend line is significantly breached, delete it. Note the word significantly breached, delete it, and draw a new one. If you do not draw a new one, market will leave you behind. Market will leave you behind. Market will leave you behind. Okay. Right. Okay. Now, next slide. The network is a little bit so. So, how to draw correct trend line? How to draw correct trend line? Number one, identify obvious peaks and troughs. Identify obvious peaks and trough. Now, the word obvious here is very important. Very, very important. So when you see market moving, forming higher high and higher lows, or when there's a pullback, okay, there's a pullback on an uptrend, or the pullbacks where the pullback ends and the beginning of an impulsive movement, those are the turning points in the market. That's where you'll be drawing your trend line. But we'll see it on the chart. So number two, connect a minimum of two obvious peaks with a line from left to right. This is a downward trend line. Or connect a minimum of two obvious troughs with a line from left to right. This is an upward trend line. And let me show you an example. This is what we're talking about. This is a low, this is a trough. Market is forming, higher highs and higher lows, higher high and higher low, and then here now, high and then another high, then we have a low, another low. Just connect these two lows, these two troughs together. Let it just be because in the future, price may come to respect it. So now, for example, this is how you draw a trend line. You join two obvious peaks from left to right. Now, how from left to right? You make sure that if you look at this line now, you're touching the peaks. You're touching the wicks. The lines must not pass through the wicks. It must just touch, just the touch of the wicks, the touch, especially the first two. And I told you earlier, there must not be obstruction between point one and point two. As this example is concerned, it is point one, this is point two. Now, the rule of the trend line is to watch out for the third point. The third point is usually where your area of interest is, where you are seeking to enter a trade. That's your area of interest, the third point. The third point. So the third point is what we confirm. For example, now, since now I'm already looking for a sell on this trade now because I'm seeing that this support is already broken here, and then I'm looking, okay, price is already selling here. Okay, so I draw my trend line. At the third touch, if I see the signal that is telling me, oh, the price will continue in that direction, then I'm going to be entering a sell. For example, this is the downward trend now. Look at the close of this candle, which is a bearish engulfing candle here. That will give me an entry, and then I'm going to be entering my trade here, and I'm going to catch a lot of pips here. I'm going to be catching a lot of pips here. That is downward trend line. Now let's get to our charts. I hope you understand the theoretical aspect now. Okay, so let's get back to the charts. Let me now make money on gold today. Now I did this trend line. You can see that my trend line is touching the tip of the wick, the tip of the wick. Then, especially point one and point two. So as far as I'm concerned now, this is my point one. Point one, very powerful. Then this is my point two. It must just touch, it should just touch the tip of the wick of the candle. You know, candle has both the body and the wick. This is point two. Now, my focus is on the third point. My focus is here now, that when the price get to the third point in the future, when the price get to the third point in the future, will it obey the trend line or disobey the trend line? When the price obeys the trend line, that means I'm expecting to buy because price has been buying, it's been buying. You know, I've been able to identify the trend. I've been able to identify the trend of the market from the higher time frame. Okay, and so, but I draw my trend line now, and I'm watching. Will it give me a green candle that shows me that this trend line will be respected? Okay, so but if this candle has broken this trend line, that means it's breached. That means it's broken. So we call it trend line breakout. Like I told you earlier, there are two ways to trade trend line. This is a trend line bounce now. So the moment I see this candle is called piercing candle. It's called piercing candle. It's one of the candles that give you clue. Don't worry, we'll part of our courses, part of the training, we include the reversal candlestick patterns. So I'm going to teach you all of that. But for now, this is a piercing candle. It's also a clue to tell you that this trend line is about to be respected. So at the close of this trend line, knowing fully well the time, the New Year session, I entered a buy here, and then the price is still going. So when there is this, when this upper one got broken again, and then it break the high that was formed again, we enter another position here, and price is still going on our side. That price is still going on our side. And then I told you I closed the trade when I was about to go to car wash to wash my car. So now let's now go back in time. Let me switch to 1 hour time frame, and let's just draw different and plenty kind of trend line, especially trend line bounce, and let's see how price respects trend line. Let's see how price is respecting trend line. Okay, let's see how price respects trend line here. Okay. You can see something here again. Okay. Can you see my screen now? Can you see my screen now? Can you see my screen now? If you can see my screen, please type 2 in the comment section if you can see my screen. Type 2 in the comment section if you can see my screen. If you can see my screen, just type 2 in the comment section. Okay. Now, okay, all right. So now this is what I'm seeing. Let me get back to my chart. You can see now, I just did another trend line here. Point 1, look at it. Point 1, point 1. Let me just write the number there. Then I have my point 2, point 2. You can see at the third touch of the trend line, price, respect, price. This is where you now, okay, this is what I used to do on the third point. Just put this arrow. On the third point, then make a buy because it's respected. So if I buy from here to here, this is good. Don't forget. If I buy at this rejection here, if I buy here, my stop loss is going to be at this peak. That's 364 pips. 364 pips. This is how trend line was. So let's see if we can get another example. Let's see if we can get another example here. Do we have another example here? Oh no. This trend line actually works. This particular trend line. Okay, let me look for another better example. But let me switch to GBPUSD. Is another beautiful example. Is another beautiful example. Did you see now? You see now? This is another beautiful example. So I have my point 1. I have my point 1. Then I have my point 2. I have my point 2. I told you that between point 1 and point 2, there must not be obstruction. And when you are drawing your trend line, it should touch the wick. It will only touch the wick. So point 2 is touching. Then what do you think is going to be happening here? I'm going to be taking a sell here. I'm going to be taking a sell here and see how the price moved in my direction. This is how to trade with trend line. This is called trend line bounce strategy. That means when the price gets to the trend line, it bounces back. It bounces back. Now already here, now you're already expecting to sell. You're already expecting to sell, so you're just trying to see how the trend line will give you an entry, how the trend line will give you an entry. You can also say something like this here. I have my point 1, okay? I have my point 1, then I have my point 2, then I'll be looking forward to sell at the point 3. So point 3 is giving me a sell, okay? Then point 4, this is another point. This is another point. So if I take a sell from here and then price bounce, touch the ceiling and then touch the trend line, revise back again, I'll be entering a sell. This is like, sometimes I do something like that too, okay? And I just say, okay, it's like this is the double confirmation that the price is still respecting the trend line. But notwithstanding, you can just limit limit it to 1. So this is going to be a sell for me, especially here. So this is trend line bounce strategy. So all I need you to do now is to go on your chart and look for these examples and just draw trend line. Just draw trend line. Don't forget I said you can do it on any time frame. You can draw it on any time frame. You can also see here. You see trend line here. See the power of trend line in this place. See the power of trend line here. You have my, I can say category. Then what is going to be happening? I'm going to be entering a sell here at this touch. This is, so I'll be entering a sell here. Where exactly you're going to enter a sell, I'm going to let you know in the future. But all I'm teaching you now is how to take trade by using trend line. How to use trend line to determine entry and exit. Look at it again. Look at it again here. Okay, I have my point one. I have my point one here. I have my point one here. I have my point one. I have my point two. Then at the third touch, if you see at the third touch you are watching, what happens is that when these two peak, when these two troughs are already formed, these two lows, the moment they are formed, you already draw your trend line before price get to this place. You already drawn it, but you're watching it in the future. The moment you see that at the same touch of trend line, my goodness, this candle is forming and is in the direction that I'm already expecting it to go. That means the moment it's formed, you enter your buy straight and you can see how many pips that the market move. Market move a great while, a great deal. This is about okay, let's just say here this is about 104 pips, 104 pips, and that's remarkable. That's remarkable. You can see now here. So this is how to use trend line to trade. This is how to use trend line to trade. So I will need you to go to your to your currency, to your charts, go back to your chart, identify bullish trend and bearish trend, and then you can see another one here. You can see another one here. This is my point one. Point one. Then I have my point two. I have my point two. Then at the third touch, my eyes is watching for the third touch. Look at the third touch here now. I'm going to be entering a sell. The moment I see this rejection, when I see the rejection, I enter my sell straight, and you can see that the price moves in plenty pips. Price moves so massively. Price moves so massively. This is how many by how many pips? Price moved by 90 pips. 90 pips. Let's say 91 pips. Very massively. Very massively. You can see now. So this is how to use trend line to trade. And I want you to go to your chart now and give me plenty examples of trend line bounce. Just draw plenty of it. Draw it draw it on GBP USD, draw it on gold, draw it on USD JPY, draw it on Euro USD, draw it on as many currency pairs as you want. Okay, as many currency pairs as you want. You can see this one here. This is one, this is two, and this is steady. Price come down here. Even though it was trend line breakout I was looking for here, not necessarily trend line bound. So you can see trend line works perfectly well. It does not lie. You can see it here too. Point one, point two. At the top touch now, the price is going down. The price is going down. Okay, let me show you this one. Let me give you this example. You can see this is the first point. So I have my point one. I have my point two. I have my point two. Then the third touch of the trend line is where my eye is looking for. It is called my area of interest. I used to call it in the last class the dawn zones. This is the dawn zones. Area of interest. This is my area of interest. This third touch now. The moment I see rejection now, it's telling me that the price is respecting this trend line. So what do? I take myself, and then the price goes down and down and down. So this is the lesson I have for you tonight. Okay, I hope you understand it. I hope your network is good. I hope you're able to catch what we are sharing. And so I'm going to be ending the class here. If you have questions, let me know. Make sure you do the assignment now. Draw out trend lines the same way I've shown it to you on GBP USD, on gold, on Euro USD, on USD CAD, on AUD USD. Draw 10 trend lines on each of these instruments. Then I see you again tomorrow. Thank you.